The Ontario housing market isn't crashing. But what's coming next isn't what most people are expecting, and most people won't see it coming. Let me show you why. Let's look at exactly what is happening behind the scenes. After we saw those crazy 2021 prices, housing projects in Ontario have been declining for several years now. In 2024, we saw about 94,000 new starts. In early 2026, that pace dropped to under 54,000 annualized. To put that into perspective, that's about 30% of what Ontario needs to hit its housing targets. Now, here's where it gets more serious. Because in the GTA, a lot of our supply is dependent on condo construction. And in early 2026, something happened that we haven't seen in over 30 years. Not a single condo project launched in the GTA. Zero. And that's a much bigger deal than it sounds. So even though there's still inventory on the market today, the pipeline for future homes is shrinking much faster than people realize. So let's look at some of the data, because this is where things really break. In one of the quarters in 2025, just 319 units sold across the GTA. That's a 35-year low. That's down 90% for normal levels. And because projects need about 70% pre-sales to get financing, a lot of them simply aren't moving forward. In 2025 alone, 18 projects, over 4,000 units were canceled. Since 2024, that number climbed to nearly 7,000 units across 32 projects. And another 20 projects are still sitting on either hold or they're in receivership. So while people focus on today's listings, thousands of future homes are quietly disappearing from the pipeline. Now here's why all of this is happening. A lot of projects just simply don't make any financial sense anymore. Construction costs are high, development charges are up, interest rates are elevated, and developers just can't sell those units fast enough. And then again, there's already so much inventory sitting in the market. Investors who used to drive construction, they pulled back really hard. And at the same time, the carrying costs in Toronto, they're up about 24% since 2022. We did an entire video breaking down what it would cost you to buy a $650,000 condo in Toronto. Link is in the description. And the buyers who bought in 2021 are already facing losses of around 5 to 6%. So demand for pre-sales collapsed. And without roughly 70% of the units sold up front, projects, they can't get financing, which means they don't get built. And another thing, which is very important as well to factor in, is immigration. Ontario's population has been growing rapidly with hundreds of thousands of new residents each year. And now roughly 75% of the housing demand has been tied into international migration. Now recently, the government started to pull those numbers back. National immigration targets are being reduced to around 365,000 by 2027. On the surface, it sounds like the demand should ease. But here's the problem. Once again, housing does not respond in real time. So even if the population growth slows in the short term, the supply pipeline is already being set for 2027 and beyond. And if you zoom out for a second, Canadian housing market has always moved in cycles. We saw a major run-up in the late 1980s, followed by a sharp correction in the early 90s, then a long period of stability before, one of the biggest expansions in history. So we're talking all the way from the 2000s to all the way to 2021. And what drove that? It was falling interest rates, population growth, and easy access to credit. But every cycle eventually resets. What we saw in 2022 with rapid rate hikes wasn't random. It was the kind of shift that typically follows a long run-up. Now, here's the key point. Markets don't move in a straight line. They expand, they correct, and then they adjust. What we're seeing right now may be just that adjustment phase. But this is where the story gets confusing. If you're watching the headlines, you think Ontario has too much housing. You hear things like record inventory, prices are falling, buyer's market, condo crash. On the surface, those headlines aren't completely wrong. Inventory is higher, sales are slower, prices have softened from the peak. But the problem is most people are only looking at what's happening today. Very few are looking at what's coming in the next 3, 4, or even 5 to 10 years. Because while the headlines focus on current listings, the actual construction pipeline underneath the market is collapsing. Projects are being canceled, new launches have dried up, and housing starts are sitting multi-decade lows. So the market is sending two completely different signals at the same time. Today's market, there's too much inventory. Tomorrow's pipelines, there might not be enough homes coming. And the contradiction might end up becoming the biggest housing story of the next decade, because the inventory people see today was mostly started 5 years ago during the ultra low rate boom. But the homes people expect to buy in, let's say, 2028, 29, 2030, many of those projects were never launched in the first place. And that's the part that almost no one is pricing in yet, and nobody's talking about it. And honestly, this is why so many buyers in Ontario feel stuck right now, because depending on which data you look at, you can make a completely different decision. If you look at today's market, you see falling prices, higher inventory, and sellers are more flexible. So naturally, a lot of buyers think prices may fall further. Maybe I should wait another year. And in the short term, that might actually happen in some parts of the market. But like I said, at the exact same time, the future supply pipeline is getting weaker and weaker and weaker, which creates a very strange situation. The market feels soft today, which potentially sets up tighter conditions years from now. And that's why buyer sentiment is so divided right now. Some people, they see a crash. Others see the early stages of the next supply problem. And the truth is, both sides are reacting to different timelines. Short term, the market still has pressure, but long term, Ontario may not be building enough homes to keep up the demand, and that's the real uncertainty buyers are struggling with right now. Not just will prices go down, but what happens if there's no homes? What happens if supply disappears before affordability actually improves? For buyers, this market is becoming incredibly confusing because the signals are completely mixed. On one side, you're seeing prices cut, more listings, and headlines talking about a slowdown. But on the other side, the future pipeline is quietly breaking underneath the surface. So buyers are stuck in this weird position where waiting feels safer, but waiting could also become the mistake. And honestly, a lot of buyers right now are mentally exhausted. People who got priced on in 2021 are hoping for a second chance. Investors are scared of catching a falling knife. First-time buyers don't know if this is an opportunity or a trap. And that uncertainty is exactly why transaction volume has collapsed. Most people aren't confident enough to move, but historically, the best opportunities in real estate usually happen when the sentiment is uncomfortable, not when everybody feels safe again, because once confidence comes back, competition usually comes back with it. So for buyers, the real strategy right now probably isn't, can I perfectly time the market or can I perfectly time the bottom? Am I financially stable enough to buy something that still makes sense for me in the long term? Because buyers waiting for total certainty usually end up buying after the market already moved. And the buyers trying to predict even short-term headlines often miss the bigger shift. Right now, patience matters, but so does perspective. Because this market doesn't look dangerous because prices are euphoric anymore. It looks dangerous because almost nobody agrees on what happens next. And markets usually reset hardest when people are most divided. My name is Sandeep Takhar with Remax Realty Specialists. If you need guidance in this market, let's sit down and let me show you some numbers, and then we can take it from there. Let's keep an open mind and see what works for you or what doesn't work for you.